What's going on YouTube? Stocks by the numbers. Welcome back. I wanted to do a quick video here on a company that I know a lot of people have been talking about. Got some Pelosi connections here. NGL Energy Partners LP. Ticker symbol NGL, listed here on the New York Stock Exchange. Now this company, as we see here, all the way back here in 2011, came out around $20, slowly climbed all the way up to about 46, and then completely tanked down to 5. They rebounded it to 25, and since then it has been completely basically downhill since about the end of 2022. And if we pull up a 5-year chart here, you can see how we have pulled down, created this new low of $1, and then immediately bounced off of that low and began exploding to north of $4 a share. Now, again, in the short term, it might be because whatever, some sort of Pelosi connection, whatever it is. However, since rallying off of that bottom, we are in an ascending wedge, which of course is bearish, which is why, in my opinion, with these earnings coming up here, estimates of $2.153 billion on around August 8th, if the company comes in and seriously misses that, I have a feeling they can chunk this down before taking it back up higher. Because in my opinion, if we look at the numbers, it should be higher. However, the one thing that really does bother me is how negative a lot of these numbers have been. I mean, you can basically bet that this company is going to miss earnings. You know, we had multiple misses on the revenue side and the EPS side. Now you can see a couple of beats on the revenue side, big misses on the EPS side. So the margins have really been what they've been beating the company up for. However, as you see here, the company used to pay a dividend, and now they no longer pay their dividend, which should in turn increase stock price, in theory. But overall, in my opinion, I do think the company is undervalued, especially in the numbers. They're bringing in billions of dollars, and the market cap's only several hundred million. The stock right now is $3.85 a share. It's up 4 cents, a little over 1% here on the day, near that 52-week high. But again, probably going to stay in that channel, in that wedge going into earnings. And again, you can see something where it might only drop a little bit or just remain flat coming out of these earnings and just continue to climb up to this next level, which in my opinion looks like it's going to be $4.99. So again, the market cap here, a little over $500 million. The company's losing a little over half a dollar a share. And again, we have multiple misses here on the EPS side and even the revenue side as of late. But look at the revenue coming in here. Back all the way in 2018, as they were sliding down, the revenue was decreasing, the margins were dropping, but they were doing $8.69 billion in revenue. Now you can see, look at the U-turn that they've made coming out of 2020 here, jumping up to $795 billion and now back up to $8.69 billion for last year, 2022. The only difference is you can see the profit margin here of about 0.59%, they brought in about $51.5 million. You go back here, profit margin over 4%, they brought in over $350 million. However, you can see the most recent news article, as you see here, got upgraded at Wells Fargo because they have potentially rectified some situations that they had going on in the balance sheet. So if margins are going to continue to increase again, then obviously the price of the stock is going to increase as well. But even with the company bringing in over $8.5 billion here last year, I mean, we can easily bring this market cap up to $1-2 billion, no problem, if not even half of that, which would be $4 billion. However, again, that is probably going to take some time, but technically in the numbers, it should be there. And even if we come down here and look at some of the financials, I'm sure a lot of you will agree with me. Now, if we come down here, you can see again, look at the multiple misses just year after year after year on the revenue side and on the EPS side. So understandable as to why this company has been suppressed over the last couple of years. They're consistently disappointing shareholders and analysts when they post these numbers. However, we see the debt climb to about a little under $3.5 billion back in 2020, maintained and slowly and now pulled back to sub $3 billion now in debt for 2022. We have assets outweighing liabilities. I actually thought it was going to be the other way around when I saw how much they were beating this stock up. So assets outweighing liabilities in both the short term and the long term. And if we switch over here And if we just check this income statement here, you can see again, look at how much revenue this company used to bring in. Then they completely dipped down to $5 billion, and now they are completely reversing, and they're back to where they were here. So in 2023, moving forward, if the company is able to get back into those double digits and post 10, 11 billion, obviously they'll be trending in the right direction. But either way, with the way they came out of 2020 and this type of revenue that they're bringing in, I feel, in my opinion, that this stock should definitely go higher. The cost of goods sold, very, very high percentage, obviously, of the revenue coming in. But look at the gross profit here, up to almost 800 million. Year before, 768, and look before that, down in the 4 and the 500s. So now we're up to 700-800s, right? So that's what they're talking about. They're talking about this quote-unquote balance sheet repair. This is what we're seeing here. And this is why when you're seeing some of these margins and these profit numbers increase, that's why the stock has been rallying as of late. So definitely justified. Operating expenses up to 385 million. Obviously not the highest they were at some point, but again, the operating income, again, gross profit minus operating expenses yields operating income. That's why they're in this order. Total revenue minus cost of goods sold yields gross profit. So if we take our profit, subtract operating expenses, operating income, 412.73 million. Now you can see a little bit of a dip from the year before. However, look at before that was 100 something million. 1.5 got up to 170. So now we're in the 400s, right? And supposedly on track this year for over $500 million. So that's why if this company really did take care of what it had to take care of, and now everything's going to start rocking and rolling moving forward, just in the numbers alone, it is tremendously undervalued. And even here at 385, in my opinion, I think it's a buy. Obviously down at $1, it was a screaming buy. But again, I know you feel like you may have missed it, and they could potentially drop it in the short term again. But if you do have that liquidity, if you start piecing your way in here in the mid threes, the high threes, and then they bring it down to like the high twos, then obviously just add to the situation, because we can tell, again, going back to the chart, we can tell that the U-turn is occurring here in real time, in my opinion. So that's why we do have to be cautious of these earnings coming up around August 8th again, but I really don't know if it's going to really keep the stock suppressed as much as it was previously, if all of that made sense. But yeah, so oh no, I was looking at the income statement. Yeah, so operating income again, higher than it's been. We switch over here to the balance sheet, and you can see there has been a decrease in assets though, right? So if you look at the assets, you can see this is the lowest the assets have been since going all the way back to 2016. However, they have kind of trimmed down the liabilities as well, sitting here at 4.14 billion, was up to 4.8 last year. So that's why we have some numbers heading in the right direction, some heading in the wrong direction. But there are certain things that are I don't want to say red flag, but obviously they're slightly negative, which is to why they're keeping the stock down. But you can see the equity here now, 1.3 billion, year before 1.27, so slightly moving up. But before that, the company had a lot more equity on their balance sheet. And that's why, again, that is another reason as to why they could be, the short sellers could be hitting the stock hard. And again, the debt was increasing, now began to drop down. So that's why they're starting to get all of their ducks in a row. The book value right now, 345. Stock's trading at 384. So, I mean, you could say there's not much to lose. But again, obviously you really don't want the company to become insolvent. But you can see the cash, the increase in cash here. There's another reason why they're saying, oh, okay, they're starting to turn everything around, blah, blah, blah. And you can see this is basically the most free cash that they had going all the way back to 2016. So again, the company does have really a lot of positives lining up for them, and I have to say that I feel that the positives are outweighing the negatives. Trading 0.06 times sales right now, only 1.13 times cash flow. However, again, was lower at some point, so that's why after bringing it up, they crashed it all the way down to $1. Now they brought it up to north of $4, right? So they might have it hang out for a little bit. So that's why, if you're going to step into this today, and tomorrow it's not $5, like you can't get upset. Like if it goes down, if it remains flat or volatile moving forward from this point, you really shouldn't be surprised. I just want you to understand all the risks involved before you step in, if you're not already in. But price to book now back up to 1.1. which technically on paper still is low, back to almost the highs here, going all the way back to 2016 when it was trading about 1.25 times book value. You can see hasn't traded in line with book value since then, and is now back above that 1 times book value level. So that, in my opinion, is a very good sign. The enterprise value, supposedly, what another company would come along and pay for this company, is $4.3 billion, apparently. And that's why I always say, like, the revenue cannot be denied, right? The company's bringing in billions and billions of dollars, and you're telling me right now the company has a market cap of only $500 million, right? It just doesn't make sense. So that's why I said, even if we get half the annual revenue, that would be about $4 billion, and you can see, supposedly, that's what the company is worth to another company. But you can see the return on assets, equity, invested capital have all made a little bit of a U-turn, and now we went from negative to positive. The gross margin kind of bouncing around. However, you can see 2, 4, 5, 7.5, and now we're climbing and we're maintaining these 9s. So even though they're bouncing up and down, I really don't view that as much of a negative. It's definitely more of a positive in my opinion. Operating margin, going back to 2021, where are we? Here. But operating margin, 2021 here, this was the high, 5.27. Last year dropped down to 4.75, still significantly higher than where it was for several years before that. And now looking, well, right now on pace to finish the year for 5.1%. So again, even though slightly down from those highs, phenomenal turnaround in the last couple of years from where they've been. So this is why, again, seeing these numbers here, you know, just clearly making this U-turn, I mean, you know, it's understandable as to why people through the company, you know, some higher price targets. And again, Wells Fargo upgraded about 6 weeks ago. EBITDA margin, again, earnings before interest, taxes, depreciation, amortization, we can see was down here. Look at this, sub 2, 2, 4.5, 5, jumped up to the 9s, slightly sub 8, now supposedly on track for about 8.5%. So even though the EBITDA has gone down, you know, I do still think everything looks good as a whole. But again, the net margin pulled back negative here was slightly positive. So again, that's why I understand why they're keeping them down. However, I also understand as to why this company began trending and everyone began talking about it. And you guys may have grabbed shares down at $1.50, $2. And, you know, now you're curious on where it's going to go. Again, in my opinion, in the long term, I think it really does look good. I don't know if it's going to get back up to 20 and 30 where it was many years ago, but you can easily continue to take this rally on and take several dollars here. Again, in the short term, I feel it's going to pull up to $4.99 in my opinion. But even the inventory turnover here, you can see the high obviously was up to 60. Then it dropped back down into the high 20s really was where it was. And now you can see the jump here into the mid-high 30s and even into the 40s. So a lot of these numbers are really starting to kick it into gear. And the asset turnover as well, you can see, was up to as high as 275, dipped all the way down to sub 1, and has since been rebounding the last couple of years. This is what these analysts were talking about. Now you see something like the asset turnover going from 0.84 up to 1.3, up to north of 1.5. So a lot of positives here. Again, the company stopped paying their dividend a couple of years ago, which technically means they have more money for themselves and the business to reinvest in the business. However, random fire truck going by. However, you can see moving forward here that they are basically kind of plateauing this revenue, right? For 2022, estimates were almost $9 billion. The company came in 8.69. But moving forward, you can see for 23, they're only estimating 8.12. And then for 24, only 8.2. So it's funny because they're forecasting that the business is stagnating, yet at the same time, of course, they're forecasting that the business is going to become much more profitable than they are right now. And of course, more importantly, if they, again, supposedly repaired the balance sheet and they're getting their margins in order and their ducks in a row, then yeah, over the years, yeah, you're going to turn around one day and this is going to be back up to like 8, 10, right here, maybe 10.5, you know, up to $11, and you're going to say, wow, man, I remember watching videos, this was only a couple of dollars a share. So again, in my opinion, overall, the numbers look very attractive, even with the company consistently missing earnings, so to speak, for really the last couple of years have kind of been wishy-washy. But Again, could have some volatility here in the short term, earnings coming up about the first week of August, but over the long term, I'm just waiting for that retracement here to around $5, and then we can talk about jumping up there to about $6, back to where we dropped off that gap, and then of course we can just continue to climb into the 8s and the 9s. But that may take a little bit of time, because again, if every quarter, if we're going to slowly run it up in between earnings, and then you have to expect a little bit of a sell-off and a breakdown and some profit taking when they report inconsistent revenue and EPS, right? So we're going to climb, and then we could potentially drop on earnings, and then we're going to climb just because we're undervalued, and then we could potentially drop on earnings, right? And then we're going to climb again. So it may be a situation like that, but long term, in my opinion, I really do think this could work out. I know there's not many analysts on this, I don't believe. If we check the forecast, we can see 2 analysts saying to hold it with a price target of $4. Well, that's pretty conservative thinking, if you ask me. But in my opinion, I do think it's a buy, even with the margins low. Again, we're seeing this in a company like a Goodyear Tire. I always talk about GT. Basically, same thing. They beat the company up for not being wildly profitable. Forgetting the fact that the company is doing $18-20 billion a year in revenue, and you're telling me the company's only worth a couple of billion. I mean, it's impossible. And that's what we're seeing now with another company like NGL. The company, again, even though missing earnings here quarter over quarter, company's bringing in $2 billion a quarter consistently here. Look at this. We're going back 6 quarters in a row. It's 7 quarters before it dipped below $2 billion on the revenue side. So, if you're bringing in that kind of money every quarter, and now, of course, on top of it, you're slowly making yourself more profitable and getting some of those margins to look much more attractive than they did back in 2019 and 2020, then yeah, your market cap is easily going to start chunking up, and this $500 million is going to probably soon say $1 billion, and it's just going to be off to the races, because the more it climbs from these lows, the more it's going to show the percentage return, the more it's going to be trending, and the more that newer people are going to come in and help pump the stock up even more. So that's why, again, it may take a while before you see like double digits if that's what you're looking for. But overall, in my opinion, I don't think it looks half bad. I really don't think it looks, too bad. We have seen worse. I will say that. We have seen worse. This is the daily on stock charts. You can see the RSI really got up big on these rallies, pushed well above 70. Now it's kind of been just chilling, calming down, but you can see the tightening happening here on this Bollinger Band. So that's why I'm saying it could kind of stay in this range, and even if numbers are kind of close, you may see a breakout upwards. But the good news is, with a company consistently increasing and bouncing off these lows like this for several months, is we now have the moving averages moving up to help support the stock in the longer term, right? So now on the daily, we had our 200-day was down here, it looks like at about 1.5. Now it's up to 235, right? So the moving average since February has increased over 50% and is now sitting at 235, right? So your all-time low a couple of months ago might have been $1.50, $1.60. Now you may potentially only see a pullback to about 2.25, 235, and then we'll bounce off that and start climbing back up into the 3s, right? And look at our 50-day moving average as well, all the way back here. You can see, $1.30, $1.40, not even on the chart, and has since completely started raging. And now your 50-day moving average is sitting at 3.5. And you can see there was only a slight lull period that the stock actually dipped below that moving average. Since then, has been bouncing off of it very nicely. So that's, again, in the short term, you may even see a pullback to 3.5. However, I feel like that is your immediate short-term bottom, in my opinion. But RSI sitting here at 52.5. Looks like it took a breather, bounced, came back, and now may potentially start to climb again. Getting messaged like crazy. Switching over here to the weekly on stock charts, and you can see the MACD has been climbing like an animal. Tried to retest, had that slight cross there that we spoke about back on the daily, that lull period there for a couple of weeks, and then you can see completely crossed and climbed back up, and the stock rallied up to 430 or wherever it was. Looks like it's very close to touching here, but again, we'll probably touch and potentially flatten out, because we do have those earnings coming up, so they may want to hesitate on the earnings there. But the RSI kind of relatively high, actually 64.7. So that's why I'm saying, again, on these breakouts, the RSI really exploded and the stock seriously climbed up. So now I feel like there is going to be some consolidation, and they're going to just kind of hang it out and just let it chill out for a little bit. And then these earnings are really going to tell us in the immediate future what is going to happen. But this is the rally right here when the bull dropped. Look at this, from $1, rallied all the way up. Where'd they bring this to? 403. What a trade that would have been. But overall, again, this is why sometimes you want to wait for confirmation, right? Did we miss a rally of 200-300%? Yeah, it sucks. I know it does. However, at the same time, if it didn't rally here and I showed you the lifetime chart from this point to inception, you probably wouldn't have bought it either, right? So again, that's why sometimes I wait for the breakouts and I wait for the confirmations, because again, does it suck? Yeah, it sucks. You could have bought it at $1, $1.50, $2. Now it's at almost $4 still. But again, on the flip side, you're now stepping in at potentially low 3s, low 4s, basically almost knowing that the reversal is now in trend and that's what's going to be happening, and we're more than likely going to make money off the situation, right? I'd rather have high conviction. I'd rather know than hope. Down here at $1, you were hoping, right? And that's what I'm saying. Up here, getting above, look, double resistance off of this 200-day moving average. Now it pulled back to 332. Double rejection. And then, boom, you had the breakout, right? And we've been holding. We've been holding for months, right? So that's what I'm saying. Now we have much, much higher conviction than we would have here or even on this little pump here, right? We needed some confirmation. We needed some breakout to actually have conviction. But again, going back to the, where is this, February, you can see broke up above this 50-day moving average. At the time, looks like it was, maybe like 160, 165, and has since exploded. And now our 50-day moving average is 227, and our bottom Bollinger Band is 231. So that's why I'm saying that may potentially be like the bottom, maybe like that 2.25, 230 mark. And in the short term, again, when I spoke about the pullback, if earnings are light, that's what I mean. You may only pull back to here now. You may only pull back, retest this 200-day moving average, stay flat for a little bit, and then continue to climb higher just because it's undervalued in the numbers. Mid Bollinger Band right now, 330 on the weekly, and the 200-day, 332. So, again, this was like worst case scenario, but yeah, right there, see? Like right there where that candle stopped and dropped, where this rejected, where this one held, right there, those low 3s, that 320, 3.25 mark, 322, that's going to be probably your bottom in the immediate short term. Unless, of course, the company completely shits the bed here with these earnings coming out, then they'll bring it down to 260, 250, or whatever it might be. But again, if this is something you're planning on holding long term because there's so much hype around it, it's undervalued in numbers, it's flying underneath the radar, people aren't talking about, whatever the situation may be. If you're a long-term investor here in this situation, again, slowly piece your way in, and if you do have a cost basis of, let's say right here, 378, right, and then it drops down, obviously, if you believed in it in the 3s, you're going to believe in it even more in the 2s. So the idea is to not get swayed. The idea is to remain disciplined. Remember why you took the investment and why you bought the stock. And if it does happen to go down before it goes up, if you have the liquidity, add to it. If you don't have the liquidity, then again, relax, stay positive, remember why you bought it. And usually, like I said, with situations like this, with the numbers hitting these new all-time lows and then bouncing and starting to rally and like I said, turning the balance sheet around, these are the signs that it's more than likely going to work out for you down the road, in my opinion anyway. So that's why. Just stay positive and stay confident. But I'm going to end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Like the video, thumbs up. Helps out the algorithm. Helps me get more eyes on the channel. Share the video. Subscribe to the channel. That is our handshake agreement. I will review any symbols you guys throw out at me. If I see something I like, I'll let you know, whether it's short-term or long-term. If you guys, need some risk management advice, come into the Discord. We can talk about it. Discord's in the description of every video. But again, that's our handshake agreement. I'll do all of that stuff for you guys. All I ask, push the subscribe button. That is all I ask. That is our handshake agreement. Help me help you. But moving forward, like I always say, I understand that markets are rocky and they're volatile and everything is very uncertain. So I do want to wish everyone success. I hope everyone makes a couple of dollars. Thanks for stopping by. I'm going to catch you guys in the next vid.